Hey everybody, so a real estate company sent this out, and yes, this is just a blank manila folder. I'll provide the screenshot so you can take a look at it yourself. And basically what we're looking at here is a promise for around $20,000 worth of savings. I'm seeing a lot of the same kind of information online that makes me want to address it, because I see personally some issues with it, but without getting into that, let's just dig deeper. Firstly, I'm a licensed loan officer in over 25 states. I want to show you what's actually on here that works, makes sense, is beneficial to you as a consumer. And then I want to show you what is just marketing. So again, just before I put on the glasses and start looking at this with you, I wanted to say that I'm not here to tell you everyone's lying to you, you as the consumer or the realtor, the loan officer. And I'm not saying I'm the only honest one out here. Of course, there's so many good loan officers, realtors, brokerages in general that are fantastic, stick to the basics of what a good salesman is, and also just a person that's pleasurable to work with. And again, if I was trying to do that and make everyone else look bad, I believe that's a sales pitch on its own. And that's, again, kind of what I'm arguing against, semantics and things that really don't retain any value. Okay, so looking at this along with you guys, let's talk about beat number one, which is the big number, the 20,000 on this one specifically. And just kind of name it as this. It's a stack of small things. I want you to watch what happens when I add up the only real dollars on here, okay? So we've got the $500 lender credit, we've got a $500 warranty, a $300 title credit, a $100 inspection credit. So that's about $1,400 in actual itemized money. So real $1,400 of savings, cool. The rest of this 20 grand is access to off-market properties. Also immediate move-in and a buyback guarantee. Real or not, those aren't dollars in your pocket, okay? So here's the skill. When you see a big round savings number, find the asterisks and add up only the lines with real figures. And there's asterisks on here that are appropriate. That's a big disparity, $1,400 versus $20,000. But I guarantee you that $20,000, that term, that number being used, is drumming up tons and tons of business because people don't really take those extra steps to figure it out. They just kind of fingers crossed and move on with their day. Okay, moving on to beat number two. When you used our preferred lender, that's the tell, okay? So looking at this, notice that the credits are tied to their preferred lender, their title company, their inspector. A lender credit is not free money, okay? It's priced into your rate. And steering you to all of their preferred vendors means you're not shopping for three of the most important relationships that come with getting into a property. You're being funneled into kind of one hub. So if we look at data from an ICE 2025 borrower survey, it was found that 78% of buyers shop only one or two lenders before choosing. And the CFPB found nearly half don't shop at all before applying. And 3 or 4 apply with just one lender. And again, that's the ICE Mortgage Technology 2025 and CFPB. And so what does that mean? That means that these offers truthfully work because they're betting on a real number. Most people never go out, never compare. And that's why I'm almost willing to bet this number, this $20,000 number, is drumming in a lot of business. And again, people don't really have time when they're busy with their work schedules, life in general, right? Where, you know, they have the time to actually go around and shop for all these things. So it's not necessarily an issue, okay? Because me personally, if I'm getting good vibes from my lender and the realtor team in general, chances are I'm not going to go out and shop for my own title company unless I feel like the fees on that closing fee sheet or the loan estimate are arbitrary. Okay, beat number 3, the $0 down. I love this one because it rings bells with so many people, but it's not an exclusive thing. Now, there's some really outdated shops out there, lenders out there, which I don't really think there's really many of them left, that may not be intact with certain, you know, down payment assistance programs. But here's the reality. This one's presented like a vault. It's presented like a vault that only they can open. This is really just basic stuff, basic products, VA, the USDA, and then down payment assistance programs, which there's a down payment assistance program in almost every state. So any qualified loan officer can do these things, and it's not a secret. It's literally just a checkbox, and if you qualify for them. Moving on, beat number 4, the buyback guarantee in the fine print. When we read this little line, must agree on price and possession date, that's the whole thing. The buyback price gets capped up front on their terms, which is exactly why it's rarely getting used, okay? Now, in fairness, a guarantee like this genuinely would, calm you down and relieve stress from a nervous buyer, and that has value. It really does. And same with this warranty for the first responder discount. That's legit as well. I'm a fan of that. But on the contrary, I've got some data. Roughly 15% of home purchase agreements were canceled in August of 2025. Per Redfin. So this is Redfin data via Rocket Mortgage. What is this saying? Guarantees don't remove real risk. Okay, beat 5. Free refinances if you buy with us. Let's define what free is. And me personally, I'm a hardcore. If it ain't really free, do not say it, because if I'm on the other side of the fence working with someone that says it's going to be free and any kind of costs come up, I'm going to be disappointed. Now let's take a deeper look. The waiver of their origination fee, that can be very real. The words free is, however, a lie. And a no-cost refi really counterbalances by them burying the cost of all of those fees into a higher rate or your entire loan balance. In some cases, we'll also see that this offer for free refinances locks you in with that lender. And that lockdown can sometimes cost you more than the fees that they're actually waiving. And it's the age-old thing. If something's for free up here, something down here is happening where they're recouping it. So I've got some data here from, again, Rocket Mortgage. Closing costs typically run from 3 to 6% of the loan amount. And on a $400K loan, that's real money for appraisal, title, and recording. The waiver only ever covers that lender's fee. So that part's free, the rest, no. Here's another one of my absolute favorites, the 10-day close, the 1-week close, okay? Absolute favorite. Here's why. When a loan officer is bragging that they closed in a week, that's real, okay? We might even see some screenshots of their milestones on where the loan's life cycle is at and how far it got from A to Z, or how quick it got from A to Z, excuse me. And that's a real thing. And bravo to those people. Even I'm excited and happy when it happens, but let's be honest, okay? A clean W-2 file and borrower participation is what heavily impacts that 1-week close, okay? That also usually comes with the stipulation of an appraisal waiver. Borrower sends docs same day. All of this falls apart, though, very quick when the borrower has self-employed income. Gift funds, condos are involved, manual underwrites are involved, okay? And this inevitably provides the insight that they're showing you the one easy deal that went from start to finish, and it makes us look real good. So here's the part nobody says. Fast isn't always good. A rushed file can skip a lot of steps, and the structure might not be as good. If we slow things down, we take our time, we make sure the property that you want is the correct property. That's an easy one. But also the actual loan structure that we're using is the best one applicable for you. But if we're rushing through it A to Z, we might just sign up for conventional, might just sign up for FHA, when there might have been a better opportunity. So let's look at the data again. ICE data shows that the typical purchase loan runs from 11 days to rate lock, then an additional 26 more days to close, averaging in the high 30s of days. Other 2025 reads land near 42 days, with FHA and VA loans sometimes running past 70. And of course, cash buyers can close in as little as 7 to 10 days. So industry averages 40 days, take it or leave it. It's the truth. And that's what borrowers should be expecting when they come into it, okay? It's a nice feeling when things get to close fast, but sometimes it doesn't happen that way, and more often than not, the average says it doesn't. So this 1-week close is really basically for cash buyers or a perfect file when you get one. Beat 7 is the one that wraps it all together, okay? So the golden rates, the golden products. The truth about the whole industry is there is no proprietary rate or product. Everybody is pricing off that same secondary market, and a lot of consumers don't understand that. Now, even though we're pricing off the same secondary market, rates do vary between lenders, and I'm not going to pretend they don't. But the variation isn't a secret vault. Again, it's a margin, and it's the fact that most people don't shop, which means your move is really simple. You need to work with someone who is honest and then compare. So wrapping it up, if it's not the rate, it's not the product, it's not the speed, then what is it that you're actually shopping for? Someone who's honest, someone who sets the file up right for you, someone who's plugged into a network that's actually useful, has the good products, and someone who's plugged into a network that's going to assist you after close. This is super slept on. It's something that I really try to advocate in, meaning somebody who's got the HVAC contact, somebody who's got the plumber, the financial advisor, to help us get you on a path that's going to set you up for the next set of properties. And I believe this is part of our job to help you free up cash. So all in all, my advice is read the asterisks, add up the real dollars, pick the human that you want to work with, not the headline. Drop a question below or DM me a flyer that you're seeing out there that you think is kind of suspicious or too good to be true, and I'll be happy to read it for you and be real straight up with you. All right, everybody, take care.